Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Tuesday, September the 9th. And I'm starting off with Nostra Terra, where it looks as though there's finally been the big break to the upside. Obviously, we have been here before in terms of a full storm in June and other various spikes all the way down. The big plus point here, I think, really is the June RSI resistance line break, which you can see here, which came in at the end of August, and also the way that we've so far had quite a clean and sustained move towards the 0.4 pence level. If you note, or you can see in June, the share price fell back quite quickly from that area. The view now is that we should head up towards the top of a rising trend channel from December at 0.45 pence, but that it may still be worth waiting for a weekly close back above that resistance line, that resistance zone, before looking for higher gains or greater gains. Obviously, looking back at the daily chart over the past couple of years, you can see that if 0.45 is broken on a weekly close basis, one would expect a relatively quick push back towards 0.7 pence over the next, let's say, 4 to 6 weeks. Next up is stock which has also been toying with private investors for quite a long time. As you can see here, an extended decline here with the shares. But in the recent past, things are looking rather more chirpy. The reason for saying this is basically a rising trend channel which has come in since the end of June, and the extended basing along the floor of the channel and just above the 50-day moving average, currently at 2.63 pence. The view now is that we should head up towards the implied target of 3.5 pence, which was really on the cards from the beginning of July, perhaps a bit more than that now, 3.6, 3.7 pence at the top of that June channel. And then after that, basically towards 4 pence, which was March resistance. The stop loss on the buy argument at the moment is really as tight as the 10-day moving average at 2.84 pence, given that we have this quite solid looking bull flag above the 3 pence level. Finishing off with Seeing Machines, where there's been a sort of flurry of good news here from the company, or regarding the company. The big plus point here from a technical basis is the unfilled gap to the upside through the former August resistance level at 5.75 pence. We've also had a very clean break of the 200-day moving average at 6.62 pence. And the view at the moment is that really, while there's no end-of-day close back below the 200-day line, we should be looking for quite significant gains. At the moment, the favoured destination is the top of a rising trend channel from the beginning of last year, heading towards 12 pence, and that could be seen as soon as the next 4 to 6 weeks. Any weakness in the meantime towards the 200-day line is regarded as a buying opportunity. Ideally, there won't be any break back below the old May peak, which was 6.95 pence, before we see the target towards 12 pence hit. That's it from me. More updates on spreadbetmagazine.com.